Okay, so we will discuss now the problems in the textbook, and we will just focus on the questions asked in the problem. We will no longer elaborate on the other possible questions. The goal here will just be for us to practice on the basic concepts of installment sales accounting, or the revenue recognition method of installment sales. So for number one, the first question here is, what is the realized gross profit for 2016? And there are different ways or approach for us to determine the amount of realized gross profit, or RGP, for the year. And the procedure that we will have to undertake would depend mostly on the available information. And in this problem, we are given with the installment accounts receivable at the end of the year. We're also given with the DGP as of the end of the year, but still before adjustment. And we are also given the gross profit rate for the year. So basically, what's important here is that you know what the DGP before adjustment represents. The DGP before adjustment represents the amount of uh, your markup or your unrealized profit before deducting the realized gross profit for the year. Okay, and once you have deducted the realized gross profit for the year from the unadjusted DGP, that's going to give you your DGPN. And theoretically, your DGPN should simply represent the markup on your ending the markup on your ending installment receivable. Okay, so we already have our unadjusted DGP. We just need our uh, adjusted DGP, or our DGPN, so that we will know how much is our RGP. Whatever is the amount of decrease to our unadjusted DGP compared to our DGPN, that would be our realized gross profit. And we can get our DGPN, or our adjusted deferred gross profit, by simply getting the markup on your ending installment receivable. Okay, so very important here is your understanding of what the 1,050,000 represent. And again, uh, that is simply the amount before the adjustment or the reduction of your realized gross profit. So if you just have your DGPN, whatever is their difference will already be your RGP. And we can get our DGPN by getting the markup on our ending installment receivable. And in this problem, our ending installment receivable is 1,500,000. And we simply need to compute for the markup on this 1,500,000. And since we're given the gross profit rate based on sales of 25%, we'd be able to say that the markup on this 1,500,000 is 375,000. Okay, and that 375,000 should be the amount of markup on your installment receivable. Okay, so that means your DGPN should be 375,000. Okay, and since we already know that our DGP before adjustment was 1,050,000, and that our DGP and or after adjustment should be 375,000, then that means our realized gross profit for the year would be 675,000. Okay. Another approach here would be to simply work back the amount of